Shocking truth about your money. Did you know that nearly 40% of Americans are completely missing out on one of the greatest wealth-building tools in history? That's right. While the stock market has historically delivered an average annual return of around 10%, almost 4 in 10 adults have zero exposure to it.
You're potentially leaving hundreds of thousands, or even millions, of dollars on the table over your lifetime.
Stick around, because today, I'm breaking it all down for beginners. And by the end, you'll know exactly how to get started without the overwhelm. Hey everyone, welcome back to the channel. If you're new here, today we're diving into stock market basics for beginners. By the time you finish this video, you'll understand what the stock market really is, why it matters, and the simple steps to start investing confidently. No jargon, no hype. Just clear, actionable info that'll put you ahead of most people out there if you've ever felt overwhelmed by money talks. Like, how do people actually build real wealth? Or, inflation is eating my savings, but investing sounds risky and complicated. You're not alone. Most Americans keep their money in low-interest savings accounts, watching it slowly lose value year after year. You've seen friends or family talk about the market, but it feels like a secret club you don't have the password for. And honestly, that fear keeps millions stuck. Paying bills, living paycheck to paycheck, and wondering if they'll ever retire comfortably. Let me tell you about someone just like you, a regular guy named Chris. Chris was in his late 20s, working a normal job, saving a little each month in a bank account, earning basically nothing. He thought the stock market was gambling for rich people, or Wall Street pros. One day, a coworker mentioned how he'd been putting $200 a month into a simple retirement account tied to the stock market. Chris ignored it at first. But then inflation hit hard. Groceries and rent skyrocketed, and his savings felt worthless. He finally decided to learn the basics. Nothing fancy, just consistent small investments in broad market funds. Fast forward 10 years. That coworker, his account had grown massively thanks to compound growth. Chris regretted waiting. But what happened next changed everything for him. He started small, and now he's on track for a comfortable retirement. The crazy part?
He didn't pick hot stocks or time the market. He just got in and stayed in. Wait till you hear the numbers on what consistent investing can do. It's game-changing. Let's break this down step by step.
No fluff. These are the fundamentals every beginner needs. Step 1. What is the stock market? Simply put, the stock market is where people buy and sell tiny pieces of ownership in companies, called shares or stocks. When you buy a share of, say, Apple, you own a small part of the company. If the company grows and makes more money, your share usually goes up in value. Plus, many pay dividends, like a bonus paycheck. Major exchanges like the NYSE or NASDAQ are where this happens. Think of it as a giant auction for company ownership. Step 2. Why invest in stocks? Here's a key fact. Over the long term, the US stock market, tracked by the SP 500, has returned about 10% per year on average, including dividends. That's way better than savings accounts, around 0.5 to 5%, or even bonds. For example, $10,000 invested in the market 30 years ago would be worth over $170,000 today at that average rate, thanks to compounding, where your gains make more gains.
But remember, past performance isn't a guarantee, and there are ups and downs. Step 3. Stocks versus other options. Not all investments are the same.
Individual stocks are shares in one company. Higher risk, higher potential reward. But for beginners, index funds or ETFs are gold. These are baskets tracking the whole market, like the SP 500. Low fees, instant diversification. Diversification means not putting all eggs in one basket, reducing risk. Step 4. Risks and how the market moves. This next part is critical. The market isn't a straight line up. It can drop 10-20% in corrections, or more in crashes, like 2020 or 2008. But historically, it always recovers and hits new highs. The biggest risk? Panic selling low. Time in the market beats timing the market. Fact, if you missed the 10 best days in the market over decades, your returns drop by half. Step 5. Key terms. You need to know bull market, prices rising. Bear market, prices falling 20% plus. Diversification, spreading investments. Compound interest, your money snowballing over time. Brokerage account, where you buy. Sell, like Robinhood, Fidelity. Many are free now. Long-term mindset. Wait till you hear this. The real secret isn't picking winners. It's patience. Studies show the market rewards those who stay invested 10 plus years. Short-term trading? Most lose money. Focus on quality companies or broad indexes. Now the practical part, how to start today.
Build an emergency fund first. 3 to 6 months expenses and savings. Pay off high-interest debt.
Open a brokerage account. I recommend beginner-friendly ones like Vanguard, Fidelity, or Schwab. Many have no minimums. Start with index funds. Put money into something like VOO, tracks SP 500, or VT, whole world. Invest consistently. Dollar cost average. Put in a fixed amount monthly, no matter if the market's up or down. Buys more shares when cheap.
Use tax-advantaged accounts, Roth IRA or 401k if your job offers one. Free employer match, cloud with instant 100% return. Start small. Even 50-month adds up huge over time.
Educate yourself with free resources, but avoid get-rich-quick schemes. Conclusion. Plus. Big takeaway. So, the big takeaway? The stock market isn't gambling when done right. It's owning pieces of America's best businesses over time. Investing early and consistently is the closest thing to a proven path to building real wealth. Don't wait like Chris did at first. Start now and thank yourself later.
If this helped, smash that like button and subscribe for more beginner-friendly finance tips. Drop a comment. What's your biggest fear about investing? I'll reply to as many as I can.
Check the description for links to recommended brokers and a free investing calculator. See you in the next one. Let's build that wealth together.